All right, I should be up on YouTube. I should be up on the VTF, and it is exactly 4:10. I'm exactly on time, so let's get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Traded a lot today. It's not really reflected in my position disclosure because I got the same positions. But yeah, I did a lot of trading today. Let's jump into it. Let me turn on the camera. Bam. All right. So, in the morning meeting this morning, I said that I was kind of optimistic on the trading session today. I really did think that we were going to get a bounce. We certainly didn't get the open that we wanted. Yesterday's afternoon meeting, we were all talking about how badly we want to have a really big gap down, because at this point, a really big gap down would have made us insanely extended to the downside. If I could have been buying some Spies versus like 445, like that would be awesome. And particularly with this IWM, we've been talking about this big support zone. It's support from the entire year, space between 207 and 210. And we closed so weak yesterday. It was an 11-point range. We closed at 213. We easily could have gapped down to 210 this morning. Still woke up really early this morning just in case, but we didn't, right? It's not too often that the market gifts us with that perfect setup. But what was interesting today is that the IWM was showing relative strength pre-market, actually was able to maintain that relative strength. The Nasdaq was relatively weak pre-market and actually maintained that relative weakness, like the first time that we've seen that. Let's take a look at our percentages real quick. Spies closing up here about 1.5%. Q's closing up 0.75%. IWM closing up almost 3%, 2.76% right now. The interesting note on this is that Apple is red, Microsoft is red, I think Amazon closed red, Facebook closed exactly flat, Netflix closed small red. So FANG names were pretty weak today. It was interesting to see, I think it was Evan in the VTF this morning was like, wouldn't it be interesting if we could actually have something lead besides Apple? And what I've noticed really consistently is it seems like when the IWM is up, all the indices are up, and when the Qs are up, not necessarily everything else is up as far as leadership goes. Technically here we have an inside day, and this is actually a really important inside day. I don't know why it's shown as this weird big tail right now. Qs are not an inside day, but the IWM is, and the Spies are. The SPY inside day high is once again basically right about to the ADMA on the daily chart. The Russell 2000 here, let me bring this chart over to make sure my numbers are showing. The Russell 2000 is an inside day. We know that this was extremely extended. That inside day high, even with the Russell being up almost 3% today, is still not even at the ADMA. This was an important trading session for the Bulls and Bears. Bulls were able to stage a little bit of a comeback, but they're not by any means even close to being out of the woods. And it's given the Bears here a spot where if they're going to apply pressure, they can do that now. The oversoldness of the Spies is really mainly gone. The IWM still has it a little bit, and the Qs really don't have it at all either. So we'll see. The way this inside day breaks tomorrow, I think, is going to be really important. And that's assuming it even breaks tomorrow. The inside day was actually so wide-ranging that it's definitely conceivable that we see another even tighter inside day tomorrow and have two inside days in a row to go into next week. But again, the break of the inside day, which way it breaks is really interesting. If we break down, Spies get below 450, we break down, that would be decidedly bearish, right? Because What is an inside candle? And I know that this inside candle today is on big volume and the volatility intraday was huge. We can look at an intraday chart. But technically, an inside bar, an inside day, is a day of rest for the market. And at the end of the day here, that's all we have, right? Yeah, again, I know volatility was pretty big. I know the volume here was pretty big. But it's just an inside day. So is this a day of rest that sets bears up to break us down? Or is this a day of rest that is setting us up to negate this negative Maribozu from like the last day, really the last 2 days? Candlestick analysis. Yesterday's candle, a negative Maribozu. Maribozu is a candle that has little to no tails. So basically what it signifies, you look at the IWM because it's huge. It basically signifies that sellers were in control for the entirety of that period. So this is a daily candle. Basically, sellers were in control for the entirety of the day yesterday, whether it was the Spies or the IWM or whatever. And today we got that snapback, but the opposite side of a negative Maribozu is very important, because if, again, just still looking at the IWM, if we're able to get above 224.21, which is yesterday's high, it's the high of the negative Maribozu, it negates that candle. And especially when that negative Maribozu is on high volume like this one was, that would be really important for the bulls to get back above, because what it would signify is every single person, if we're able to get above yesterday's high for Spies and IWM, every single person that sold yesterday, and we know, look at this volume, there were a lot of sellers. There were short sellers and there were long sellers. Every single person who sold yesterday would then be out of the money or wrong, right? So what that means is short sellers above that price begin to get squeezed, so it can make the market go up more easily. It also means that long sellers who panicked out are realizing, oh my God, it was wrong, and then they may come back into the marketplace. And even if they don't come back into the marketplace, they're not selling up on the way up, because they already sold. So the question is this a rest candle that sets us up, lets these moving averages come down and sets us up for more bearish action? Or is this a rest candle that leads to an inside and up that potentially leads to the negation of the negative Maribozu from yesterday, which then would become decidedly bullish? There's no way for me to know the answer to that. We can take some we can look at our bullish bearish neutral thing that I like to do. I would still kind of argue, honestly, that the IWM is actually neutral as long as it's holding above that huge support level that we discussed. Below like that 207 to 210, and then it's decidedly bearish. But I would actually argue that the Russell here is still big picture neutral. Small picture bearish, but big picture neutral. What about the Nasdaq? I would argue that the Nasdaq is kind of neutral as well here at this point. Really below like 390 is where I would say we're going from bullish to neutral. And I know we basically closed right at 390, but given that yesterday was also a negative Maribozu for the Nasdaq, I think we can't call the Nasdaq bullish right now anymore. 2 days ago, you still could have called the Nasdaq bullish, but I think yesterday changed that. So Nasdaq is also neutral. If Nasdaq gets above $400, that's when it becomes, I think, really bullish again. And what about our Spies? Well, Spies are probably neutral at this point as well. Definitely was a concern yesterday when we lost 354, because 354 is, the spot where we broke out from. Sorry, not 354, 454. And this 445, by the way, is also really important, but we're still, even at lows, we're $5 away from that. So I would say that the Spies are kind of also neutral, though it is significant that we recaptured that 454, but they got to get above this. So again, trying to use that bullish bearish neutral thing that I love to do to give us some perspective to try to figure out, is it more likely for this to be an inside and down and lead to further bearish activity, or an inside and up that negates the negative Maribozu and then makes us more bullish? What is more likely based on an understanding of big picture technicals? Well, the big picture technicals are broadly neutral. So again, flip a coin. You can really flip a coin, I think, is what the market technicals are telling us. Now, we did get some I guess you can call it bad news that the new variant, and this was bound to happen. I mean, the fact that the market ticked down yesterday. So there's a couple of things that blew my mind, that have blown my mind a little bit recently, which I don't know. I don't want to say I'm smarter than the market, because the market's always smarter than everybody. But a couple like news headlines that were market moving yesterday and then today that kind of blew my mind were, one, when we had the first case of the Omicron variant in California, that it really hit markets down even further. Of course we were going to get a case of it in the United States. I mean, what do you think? Like we're going to have a travel ban from South Africa, and it's not going to get here. We weren't able to stop the original coronavirus when there was only a couple of cases in the world, and we could have actually done it by, over the weekend. We knew, it's in Hong Kong, it's in the Netherlands, it's in Africa. It's just a matter of time before it gets to the United States. So I was like, how did the market not know when it downticked yesterday on the news that it made it to California, that wasn't going to happen? And then the other thing that surprised me, which maybe it shouldn't, is when President Biden came out today and he said, he more or less said that a lockdown's off the table for the United States, which to me that just seems so obvious. We talked about that in yesterday's afternoon meeting, but the market had a nice little uptick when Biden came out and said that, which all this stuff seems obvious to me, but it still is or has been market moving. So it means if it's market moving like that, it means that the market wasn't pricing it in, that the market was pricing in an 8% chance that Biden would lock down the United States or attempt to, that the market was pricing in a chance that this variant doesn't make it to the United States. But again, it was bound to happen. It's here. It's in New York City. It's in California. It's in Minnesota. It's here. So it is what it is. I thought that case from the guy with the K dog, whatever we're calling him, Kalanovic or whatever. Kalanovic, yeah, the analyst that K Money, that Pat and a bunch of us really like, and Pat always posts that information. I still think it was his take on the Omicron as being bullish is still a really interesting case. That it has the potential to push out the worse or more deadly variants, because this one is more contagious but less deadly. So just a really interesting take on it, and that has him bullish on reopening trades, and that was saying that and saying that we should come in and buy that stuff, and that was on our radar today. XLE, XLF, some of these material names, see if they could catch a bid. I guess CLF did not perform very well today. Neither did U.S. Steel, which is kind of interesting. But some of the stuff that I was looking at for trades today was, again, because I was feeling pretty bullish and optimistic. So, we didn't get the gap down that we wanted this morning. We had like a flat-ish open. It depended on which index you were looking at. Spies opened up like exactly flat. Q's opened up down a little bit, and the IWM opened positive. So broadly, I guess you could say we had a flattish open. I really liked the idea, and that was happening with Apple having bad news, right, on the iPhone situation, which obviously Apple totally bounced back. This was a big focus for me today, Apple, and I did pretty well with it. But I liked the idea of looking at DKNG and Fubo today as like a red dog reversal, Alden Smith overthrow type of trade here, where now we're becoming severely extended again, and these things have started to, I think, wash out, break yesterday's low, and then come back up. The hardest part about today's trading session was this 1045 pullback. We can look at it with the market too. Off the open, the market did exactly what we were looking for, and these names gave great trades. Buying Fubo back through yesterday's low at the open versus today's low, very tight risk. You could have done that with a lot of stock. That's what I was talking about in the morning meeting today, was buying Fubo through 1755, through, what's yesterday's low here? Through 1770 versus an opening low, that it could be a very low risk high reward setup here, so you could do it with potentially a ton of size, and it was only 15 cents risk, and it immediately, gave this fantastic follow through of over $1 in 15 minutes. But this pullback here, 1045 pullback, was very hard. I know some people got pushed out of Fubo on that. I know some people got pushed out of Airbnb on that. Luckily, DK&G did manage to hold that low. I know that was a focus for Felipe. He even cheated. I was talking about, DK&G buying back through yesterday's low versus an opening low. I think Felipe was calling out that he was buying when this thing was at 30.75 or something like that, and he was able to, capture this move. And luckily, this one did not actually break that low. Another one that was a little bit tough here was the SoFi. I called out the SoFi that was on my radar for an aggressive buy intraday to the team here back through 16. He was like, I'm buying this SoFi. This one actually really struggled, though. It did not give this same great follow-through right off the open that Fubo and DK&G did, which I was a little frustrated and disappointed about, because I ended up just putting all my focus, not all my focus, but a lot of my focus into Apple and SoFi today. And even though Fubo was like the top name I had written down on my list to do this trade, I just had too much going on, and I ended up doing it in a bigger way with like a SoFi, and I did not get the same follow through. The SoFi didn't even really close as well as I wanted it to. But yeah, just to repeat myself, the hardest part about today's trading session, I think that there was a lot of opportunity to buy off the open. That's what we were talking about. I was shorting that VXX too. Shorting VXX was a decent focus for me today as well. But this 10:45 a.m. pullback was the hardest part of the day. A lot of things, I know the Spies didn't, but a lot of things broke opening lows at 10:45, and you easily could have gotten pushed out of stuff. You see the IWM here held its opening low by a very small amount. The Nasdaq broke its opening low. The Spies held it by a decent amount, but a lot of stocks, like I just went over, Airbnb, Fubo, they broke those opening lows, and that was the most difficult part about today's trading session. And then maybe I'm crazy, but I still am a little bit disappointed by the lack of follow through. Looking at the Spies here, the percentage retracement is okay, but we couldn't really get any afternoon upside follow through. We really kind of ran into a wall of selling after getting a decent percentage retracement of yesterday's move. We ran into a lot of supply here into this 459 area, and we just couldn't break out of it. IWM was kind of grinding higher a little bit better, but even here it just couldn't really clear this like 219.50, 220 area on an intraday basis. And then the Nasdaq was obviously significantly more relatively weak with just how much the FANG names are basically all red, and Apple getting hit off that bad news. So that bad news in Apple did turn out to be a great buying opportunity. And then we did see a decent amount of bullish option flow coming in today, again, in Apple also. So Apple was a great trading vehicle for me today. VXX to the short side I caught, but I exited that position by the close. That SoFi I called out, I was able to capture as well, but I just didn't. Like I want to see this SoFi trading to $17 today or more. And I couldn't get it. Bed Bath & Beyond was another one I caught that we called out for the team here. For the gap fill trade-off, the 17 area, it actually filled the gap literally perfectly. You see the low of the day here is 1690, and the gap high here is 1680. So like basically filled this gap literally perfectly. So gap fill support trade in a stock that is 4 days down into a level that's got solid looking fundamentals and a really strong buyback going on. Was definitely a trade that I liked. And even this one, I want to see this thing snapping back in one day. Maybe I'm just, looking for too big of a move. But, stock was able to go from $25 to $17 in 6 days. Why can't I get a snapback from that $17 support buy to, 19 quarter intraday? And maybe I shouldn't be complaining about a $1.25 move when, I think I bought $17.01 today as a trade. So obviously I got good pricing on it. But I probably shouldn't be complaining, but I still, just a bunch of these names I was looking for more. But it goes back to our market, of course, right? Of course, it goes back to the market. We had this inside day here for the Spies. They ran into that wall of selling intraday. The IWM did the same thing, kind of ran into that wall of selling, giving us an inside day. And it leaves us with a big question mark going into tomorrow and going into next week, to be honest. we're in an environment here where these technicals are very neutral looking, and this rest day, this inside day, I think is really important for the market on how it breaks. Bears need us to have inside day and down, rest day and down. Bulls need us to have an inside day and up that leads to a negation of the negative Maribozu. And which one of those things happen, if you want to talk about pure technicals, flip a coin. Flip a coin. So we'll see how we gap tomorrow. I know a few guys in the VTF were discussing that we probably would gap down. That makes sense to me. I do also think that there's a very real possibility of a second inside day tomorrow, which would just tighten us up and wedge us out even further. And then we can see, which way we break from there. So that's really all I got. Like I said in the morning meeting, sure, I'm going to be focusing on some individual stocks, but I'm primarily going to be big picture focused here, looking at Spies, Qs, IWM, and relative strength and relative weakness, and that's that. So with that said, I am, like always, happy to answer any questions that you guys have about anything. Is that ArtX moving after hours? Oh, wow. We tried this ArtX yesterday. I had a big position in it that I kept pretty tight, but I got out of it on an intraday basis. It closed really bad yesterday, too. I know one of you guys called this out early here, saying that it looked good. And I was like, I can't rebuy this. I got too much going on. But this is the crazy stock that Citi increased their price target on the night before last from $7 to $13, even though it's only a $1 stock. That's what we were all looking at yesterday. Zillow up after hours too?
Repurchase.
Wow.
750 mil.
That's man.
That's good.
That is really interesting. Honestly, I like that Zillow trade. I think a lot of these stocks are too beaten up. Some of them are not. Some of the stocks that are down a ton, and they deserve to be down a ton. Because as interest rates increase, they could be worth nothing. But some of these companies are real companies that have just gotten destroyed. Obviously, the Zillow's made some management mistakes. They made some business mistakes. But the degree to which this thing is sold off to these lows, I think, is crazy. And now they're announcing a $750 million repurchase program. That's a big headline. It's trading up a lot after hours here. I think Zillow doing this actually bodes well for that entire sector of stocks that we've been talking about that are super, super beaten up, and possibly even bodes well for the IWM also. That's a solid headline, that $750 million share repurchase program at these prices. Good for them. Good for management. And you know what? This is when you want to do buybacks. A lot of these corporate managers, the governance is really bad. You'll see companies announce secondaries. I guess they're not as bad with the secondaries, but sometimes you'll see them announce secondaries at really low prices, and they announce buybacks when stocks are trading at ridiculously high prices. This is when you get that cash on hand and you're able to do it. Your stock is down and it's super beaten up, and you view it as cheap, and you want to come in and you support it. It's good corporate governance to come in and announce that buyback. So kudos to Zillow for that. This is definitely one we want to have on our radar. You could probably, even at this point, you could try to potentially be long this thing versus $56.50. It's trading at $58 right now, $1.50 risk. I think that this could lead to a snapback to the space between this 21 EMA and this $65 resistance for sure. I think it could. DocuSign getting smoked on its earnings report. I didn't see the numbers. I'm sure you guys posted them earlier here. Let me scroll up. We had a decent amount of companies report earnings after hours today. I'm not seeing the numbers in the VTF.
They beat on both. It must have been really bad guidance.
NYC sets vaccine mandate for religious private school staff. Interesting. All right, I think the next question I'm seeing here is from DJ. For small cap stocks like Palantir, is the IWM or SPY more relevant for gauging relative strength? Yeah, Palantir is going to tend to trade a little bit more like the IWM. So you can look at both. Next from DJ, also, you mentioned Apple is a stock that trades very cleanly. What are some other stocks that have clean technicals? Yeah, Apple's always the first one I think of, actually, for that. Microsoft tends to trade pretty clean, too, but Microsoft is more of a grinder than a momentum name, so you just want to pay attention to that. But that's a couple of examples. I'm trying to think about. I don't have anything else that really stands out clearly in my mind as a stock that, really tends to respect its technicals. But Apple usually does. Next here from our friend Marty. Cheers, T3 team and Derrick. You're extra busy with your Manhattan real estate business. Missing the updates. Cheers from Upper Manhattan. Cheers. Good to have you in the meeting. Next from Sebastian. Hey Derrick, can you review a trade that I made? Sure. You bought AMC at 956. Yeah, I almost reshorted this AMC today, but it didn't get quite high enough. My alert went off. What's the high of the day in this AMC? 51.21. I'm looking to short. I was looking today to potentially start reshorting around 31.50. I exited my short position that I've been in for months yesterday when the stock looked like it capitulated here at lows. Wow, look at this. Yeah, this is another one. The hardest part of the day today was the 10:45 a.m. pullback. Interesting how this perfectly held the pullback from yesterday too. I struggle very much to go long AMC as a rule. I just don't think fundamentally it belongs anywhere near these prices. I apologize to the apes if any of the apes are listening, but you guys should be taking a look at Bed Bath & Beyond, which is a real company with a real buyback and cash on hand, not this AMC, which is probably worth like $3 a share. But anyway, you bought AMC at $9.55. Sorry, $9.55, not $9.55 at $9.55. Okay, so I see you got a little bit of. I don't consider this to be a bull flag. I consider this to be a bullish consolidation. The difference is that a bull flag is a trend continuation pattern, and a bullish consolidation basically would just mean that the stock went up and then consolidated. So a bull flag, I think, has higher probability of upside prices. But a bull flag, again, would require you to be having an uptrend into the pattern. There is no uptrend in the pattern. It just moved up a little bit and consolidated. So I would call it, again, a bullish consolidation, but it's within the confines of the stock had already breaking down. So you're not going to have the same probability of success on this purchase here at like $31 as you would if the stock was, trending higher and giving continuation, or trending lower and giving a bear flag. Like, really, this is a bear flag yesterday, this is a bear flag yesterday, this is a bear flag yesterday, and then it was bear flagging again into the close, which broke up then the next day. When it broke the inside candle and 31, I see exactly when you bought. It's good execution. The 80 MA caught up and it did nothing and failed. Yeah, so again, it's exactly what I just said. You don't have a bull flag here, you have a bullish consolidation. And you have to keep in mind that it's in the confines of the stock having broken down in a big way. So I think you got to be careful with this buy. I think you got several layers of probability that are against you on the trade. I don't hate you. Definitely have a real trade here, so don't let me knock you completely. You had a bullish consolidation with the inside candle here, and the ADMA had caught up, and it looks like it's giving continuation, so it fakes you out in the position just to fail. But I do also think you had a bunch of things that were potentially against you on it. Like, again, I don't consider this to be like an actual bull flag. But you could have been looking for a further upside retracement, just like I was. 31.50 to 32.50, something like that, is maybe where I would look to short again. Marvell is also trading higher after earnings. Nice. At 76 is an important level for this Marvell. Better than expected EPS, sales results, and guidance above us. The guidance is so key right now. Guidance, especially on growth companies, and I know Marvell is not really a growth company, but guidance specifically on growth companies right now is so key to this marketplace if we're worried about rising interest rates. There's the DocuSign numbers. DocuSign is getting smoked. Beat by 12 cents, beats on revenues, guides below consensus. There you go. Doesn't matter that they beat on EPS and beat on revenue. They guided below consensus. Stock is dead. down 23%. Whew. It's a decent support spot around here at 180, but I'm not buying it. Those trades are just too hard right now. Trying to pick bottoms and stuff that are lowering guidance. Next here I'm seeing is from Damien. I was able to scoop a lot of stock in Up ST today. Yes, Up ST was a struggle at one point today also. I was watching this Up ST, you know, again, I'll talk about this a decent amount. If I'm trading SoFi, which I was trading SoFi fairly heavily today, I'm looking at the XLF, but I'm also looking at UPST. I'm looking at Affirm. I'm looking at Lending Club. I'm seeing like what these other, you know, fintechy type stocks are potentially trying to do. And I was, on the one hand, a little bit frustrated that I wasn't getting the uptick in SoFi that like a DKNG or a Fubo gave off the open. On the other hand, I was like, all right, maybe I should just be happy that it's holding in, considering that this UPST here early on in the day just continued to get massacred down to this 160. This upstart has almost given a 100% retracement of this insane up move that it had after that stellar earnings report that it had back in August. That 160 area where it held perfectly today on high volume. This is a great looking candle, by the way, for Upstart. It was able to do that right at its do or die spot. And Upstart cannot lose this 160. And if the risk reward makes sense, we could be long versus 160. I don't love buying 177 versus 160. It's too much, but we can be long versus that. And you could have been looking at it today as well. But anyway, let me actually read your question. I was able to scoop up UPST today around 163. I'm going to assume you did that on the way up, not on the way down. Or maybe you even did do it on the way down, looking at that 160 area. Though it's definitely better to be careful not catching a falling knife and buying a relatively weak stock on the way down. You want to try to buy them on the way up. I'm considering holding a reasonable amount going into next week, especially if we negate the Maribozu candlesticks in the indices. Any opinion? Yeah, for sure. Definitely keep it. Definitely keep it. Your price is 163. It closed at 177. You have a great profit cushion. It's giving you a high volume hammer candlestick right at a key level here of 160. This candle signifies to me that this stock should be able to give a bounce back to at least $200, if not a bounce back to 220. We'll take that one step at a time. But I love your trade. I love your price. I love how it closed. Awesome stuff, Damien. Be greedy. That's when you want to be greedy. You got the risk covered. You got things on your side. You got a decent profit cushion. That is when we want to be greedy. And I was even saying that today on like that Fubo. And I know, like Mark, if you're listening, I know sometimes you watch later in the day. But like, you did the right thing, man. I know you were in this Fubo from exactly the right price. You caught this whole move. You gave some of it, I think, all the way back and got stopped out at lows. But that's exactly when you want to be greedy. It's unfortunate that this thing shook you out. Certain names did. The 10:45 a.m. period was really difficult. Other names held. But if people are able to get good stock and things closed decently today, I think you want to be greedy for a bigger bounce back at this point. And again, if you get pushed out because the market does give the inside day and down, which we're saying is like a 50-50 probability here technically at this point, then you get stopped out. But you did the right thing, especially if your risk is covered, or maybe even a little bit more than your risk being covered, so that you make money in it no matter what, because those trades are a little bit counter trend on those time frames. But you know, this UPST, this thing could stay bearish and give a bounce back to $200 and stay bearish. And if you got $3 worth of risk in this thing and you're already, you know, $12 in the money, go for it. Go for it. Go for that bigger move. See you, Mike. All right. Surprisingly, not seeing any other questions into the VTF. I'm happy to wrap this one up a little early if no one's got anything. It is 4:45. Cool, good stuff. Robert doesn't have questions for once. All right, gang. You know, for people watching on YouTube, give me a like, give me a subscribe. Appreciate all that stuff. And this market's been crazy, but I think as a team, even though it's been a pretty stressful couple of weeks, I think as a team we are doing really well, and we're navigating this price action really well. So let's keep that up. Let's see how we gap tomorrow, and we'll take it from there. So see you guys.